In today's project, Clara Battut and myself, Mohamed BADRI, we're going to talk about German accounting. Well, accounting in German means Buchhaltung, which literally translates to bookkeeping. It's largely known that Germany is one of the biggest economical powers in today's world, with a GDP of $4.7 trillion US dollars. That is, well, this GDP is based on 99.3% on industry and services. With more than 83 million inhabitants, well, Germany is one of the most populous countries in the European Union. It is a great political power, and it is led by Angela Merkel. It's bordered as the most influential politician in the European Union. Well, Germany is also the first economical power in Europe, as well as the fourth worldwide. It is the founding member of the EU and a member of the G7, G20, Euro area, Schengen area, and NATO, and also houses the headquarters of the European Central Bank, the ECB. So the country's ties to the outside world are highly important, whereas in an internationally based economy, Germany has made the entire world its market. And with the US GAAP and IFRS being the most known and use international standards, German companies have to cope with these reporting methods as an alignment with its market. So, German accounting was founded on legal basis because of its origins. Indeed, German accounting standards are focused on legal texts, in addition to the fact that accounting standardization it's the business of the government and the parliament. So there is no professional organization responsible for developing standards in Germany. There's also no consultative body. So this German feature appears to be a gap. The consequence is that Germany has no representation of the IASC, International Accounting Standards Committee, and has very little influence on the development of TAS, the Tax Accounting Service. But Germany is a member of the International Federation of Accountants and publishes international standards on ethics. They are based on ethics, auditing, insurance, education, and public sector accounting. Well, being a member of the Federation of European Accountants, it is the representative body of the accounting and the auditing profession at the European level. So we can say that on a European level, Germany is very much present in terms of accounting methodology and innovation. So now when it comes to German accounting history, well, it all started off in 1931. Company law regulated financial reporting by specifying classifications formats and valuation techniques for balance sheets and profit and loss accounts. Well, the 1931 Commercial Code also contained regulations related to the General Shareholders Meeting and to management's responsibility for annual reports. Well, but at that time, the limited liability companies called GmbHs and the sole proprietor operations escaped the effects of the new company law of 1931. However, tax law still managed to regulate the accounts of these two types of companies. Well, the German accounting regulations and especially German accounting law has only a relatively brief history compared with those of some other European countries. Well, in 1937, general accounting standards and principles were codified for the first time in the Stock Corporation Law, AKTG, Aktiengesetz in German. This came about a reaction to the large number of companies going bankrupt during the worldwide economic crisis of late 1920s and early 1930s. In 1965, a significant modification of stock corporation law of 1937 took place. The dominating principle incorporated in the stock corporation law of 1937 and to a lesser extent in the revised stock corporation law of 1965 was that of the principe de prudence, as we say in French, the principle of prudence, in order to protect the interests of the creditors, as we all know. So, in 1985, the Stock Corporation Law of 1965 was more or less the sole source of accounting law in Germany, codifying accounting principles and standards. No other specific regulations existed, neither for the corporations like limited liability companies or for non-corporations such as partnerships. Nevertheless, there was a broad understanding that the standards incorporated in the accounting principle called GAAP, the GAAP. But there was no binding rules for non-stock corporations, and therefore those companies could be highly flexible in their accounting approaches. In practice, accounting for such non-stock corporations was heavily impacted by tax law. In 1985, the 4th, 7th, and 8th EC directives were embodied in the German law, thereby completely changing the existing regulatory systems with regard to preparation, publication, and auditing of financial statements. The main part of these EC directives were incorporated in the German Commercial Code, HGB, Handelsgesetzbuch, by adding a third book containing accounting and auditing rules applicable to all businesses, as well as expanded rules for corporations. Second, supplementary rules were retained or codified in separated law for specific legal forms, like, for example, stock corporation law and limited liability company law, as well for specific industries. Well, for financial years beginning after December 31st, 1999, corpcos, partnerships whose general partner is a corporation, have to use the same accounting standards applicable for corporations. This had been requested by the majority of the EU countries, EU member countries, and even the European Court of Justice for many years, who found it unacceptable that corpcos were subject to less stringent accounting, auditing, and publication requirements than corporations. Was not really logical and not fair also. So, in the last years, German GAAP has been changed significantly by BELMAG and BADRI. Those are laws that made German GAAP more comparable to IFRS. Well, in the picture, we can see that on the picture below, we can see an evolution of the Bilanzrechtsformen. This is the forms of the balance sheet called Berlig, and then as modifications were added and inflicted on the Berlig, it changed to 2009 to Bilmag and Bilrug in 2015, which is the latest and the most actually complete version of the balance sheet that German companies have to report. So transposition, well, in the first one, main changes in the Berlig of 1985. It was characterized by the transposition of 3 European Union Community Directive. Also, changes concerned in particular the annual accounts, the consolidation, and the examiner's qualifications. In 2009, they added a deregulation and cost reduction in the preparation of the financial statements and increasing their validity. In 2015's version, well, they took into consideration the implementation of the EU Balance Sheet Directive and also with some adjustment to different juridical forms of the companies.
So now we will talk about the current status of accounting in Germany. The German accounting body is the DRSC. It's a German standardization office. The main legal sources of German accounting are first the Stock Corporation Law of 1965, and secondly the Book 3 of the German Commercial Code, the HGB. The HGB is Germany's code for accounting standards, based on which companies must prepare and report financial statements. In many ways, the guidelines spelled out in the HGB are similar to the US GAAP and IFRS, but also differ in some important ways. Regarding accounting standards, European companies listed on the stock exchange must establish their consolidated annual accounts on the basis of AIS, IFRS standards. SME use the German accounting standards, device provided for by the German Commercial Code, or IFRS standard is implemented by the European Union in their consolidated financial statements. Now for the accounting practice. The fiscal year is a calendar year or other predefined accounting period, 12 months maximum, for which the accounts are prepared, if shorter. The tax accounting period cannot exceed 12 months in total. The structure of accounts is unlimited or partially limited liabilities companies, and limited liability companies are required to provide the following accounting documents. First, a balance sheet formalized according to the model of the first European Directive of 1978, then transposed into German law in 1985. 2. The income statement. Limited liability companies must add to the two aforementioned documents, the annex and an annual management report. The statement of financial flows or cash flows is not mandatory except for listed companies. Taxpayers are required to keep their books in Germany, although electronic accounting can be transferred abroad if prior authorization is obtained from the tax authorities. Accounting profession, the different accounting services, for example, journaling, accounting, audit, or salaries, and associated services can be operated by companies and individuals belonging to the following profession governed by law: chartered accountant, cost accountant, independent accountant, and commercial accountant, etc. A valid license is required to engage in this type of activity. The type of license defines the field of activities that the individual or company can exercise. The professional organization are WPK, the Chamber of Auditors, and ADW, the Institute of Chartered Accountants. The audit bodies make the preparation of the annual accounts must take place less than 3 months after the end of the financial year for medium and large companies, and less than 6 months for small companies. You can contact also an external auditor. For example, they are PricewaterhouseCoopers, Ernst & Young, KPMG, and Deloitte. In Germany, the accounting profession is not as powerful as it is in the UK or the US, and this is due to the influence of accounting law. The body that deals with its of legal origin, as it represents the profession under the supervision of the Ministry of Economic Affairs. The methods put into practice in accounting must also be used for the determination of the tax results, and this responds to an alignment principle called Maßgebungsprincip. I'm sorry, I don't know speak German. For example, the calculation of taxable profit in German tax law is made from the change in the amount of net assets between the beginning and the end of the financial year. Depreciation rules are found in German tax law, which are very strict. For example, it is required to amortize goodwill acquired over 15 years, and the maximum permitted declining balance rate is 30%. These principles make it possible to understand that the accounting and valuation rules applied in accounting are required for the determination of the tax result. The same depreciation method must be used for tax and financial declaration. But there is a critical of this alignment principle. When we analyze the functioning of most companies, we see that tax consideration take precedence over accounting principles, and the principle of alignment requires them to constitute hidden reserves. For tax reasons, there is an undervaluation of assets, which leads to a more pessimistic picture of the financial situation of the company. The capital providers, according to statistics by the German Private Equity and Venture Capital Association, from the beginning of 2017 and until the end of 2018, the following groups of investors were the biggest source of funding for private equity and venture capital funds. First, the public investor with 19%, then the corporate investor with 13%, then the pension funds with 13%, then insurance with 12%, other asset manager for 10%, family office for 9%, and finally the private investor with 6%. You can see that the public funding is the main source for private equity and venture capital. And the families invest more than shareholders. It's a cautious approach, it's a conservative approach. So we can conclude that national accounting systems have evolved over time and reflect the specific contracting situation of the preparing firm in that country. It is argued that the ongoing process of accounting internationalization and imposed harmonization bears the risk of distorting national balancing factors in the accounting systems, especially when the national environment for economic and contractual activities is not harmonized at all. We illustrated how the traditional German commercial law accounting system has evolved over time to meet specific contractual needs, and how the current process of globalization and accounting internationalization has been attempted by increasing friction and challenges, especially on the contractual and regulatory level in this country. Thank you for your listening.